given the fact that we've seen a sharp rally coming in the broader markets, no doubt the Nifty has hit the coveted 20,000 mark, 10% uptick this year alone is what Nifty has logged in. But the real party has been seen in the broader markets, which are trading higher, more than 30% YTD. But is this rally justified? Let's ask our colleague Soumeet Sarkar, who's joining us on this in the studios. And Soumeet, yes, I know you will not give your view on the broader markets and what exactly is happening in the broader markets, but yes, parabolic rally is what we've seen. There is a lot of exuberance that we're seeing in the broader markets. What are brokerages saying? Is it time to be cautious?
Well, firstly, it's not 30%. From March lows, if you see, small cap index has actually run up 49% from March lows till now. But this is before today's fall. So what brokerages are saying on this, the rally that we have seen in the broader markets. Now, Kotak has actually removed all its recommendation from mid-cap space. It is saying that it is seeing limited point in trying to find fundamental reasons behind the rally that we have seen in the mid cap and small cap, and they're saying that there are actually no positive fundamental reason that they can find out in most of the stocks. In fact, for many of them, they are seeing that conditions have actually worsened, so they are still unable to find out why there has been this rally in the mid cap and the small cap space. And lastly, they're also saying that they cannot find out too many stocks beyond the BFSI space. And do remember that Nifty Bank Index is only one index that has not gained as much as the Nifty, that is the Indian benchmark, Nifty 50 and Nifty mid cap and small cap. And hence they are finding some opportunities in the BFSI space, but not beyond that BFSI sector. However, Elara Securities, on the other hand, says that there could be some more to this rally that we have seen in the mid cap and small cap, and the main reason behind this is the fact that the rally that we are seeing from March till now is actually followed up by a huge, in fact 4 years of underperformance of the mid cap and small cap. So this rally might look a bit more, but then after 4 years of underperformance, if you see, the rally is actually not too stretched according to Elara Securities, and they believe that there could be more another 10% to the mid cap rally, another 20% to the small cap rally. And they're also saying that the flows to the small cap and the mid cap fund would continue even going forward. HSBC also has a similar kind of view when compared to Elara. They are also saying that the mid cap rally is a clear symptom of a bull market, and they are still in the midway of this cycle of this rally that we are seeing when it comes to the mid cap and small cap. They are saying that the mid cap valuation premium is at 34%, while the peak of this valuation should be at around 40% as per HSBC, and they are saying that the broader market bullish phase can still last going forward. So divided views coming in here. Kotak is bearish, in fact, on post this rally, while Elara and HSBC continue to be bullish when it comes to the broader market.
Okay, thank you so much, Soumeet, for highlighting what brokerages are believing right now. But since the March lows, definitely we have seen that outperformance in the broader market space. But in the last couple of weeks, we have seen those large caps participating as well. So would you like to highlight some of the counters that still have some leg rooms in terms of the return potential, and any of the stocks that even brokerages are highlighting?
So we culled out this data from Bloomberg, given the fact that markets were at an all-time high. So it was interesting to see if there is some legroom still left in some of the stocks going forward. So we are looking at companies where the analyst recommendations are at least 10, which means that at least 10 analysts or brokerages are tracking those companies. And then we have seen, we are looking at those companies that could give a return of more than 20% in the next 12 months. So we have got around 11 stocks that could give more than 20% return in the next 12 months. And 7 out of these 11 are banks, and the reason behind this could be the limited impact of incremental cash reserve ratio, given the fact that Kotak Mahindra Bank and HDFC Bank have given only single-digit return from March lows till now. Credit cycle continues to remain strong, while the asset quality also continues to remain benign for this for the banking sector. Moving on from the banking sector, UPL is one stock that is expected to give a return of close to 25% over the next 12 months, and this could be on the back of possible recovery that analysts are expecting from the third quarter. And there are also visible signs of recovery when it comes to prices, and the inventory situation also for UPL has been on a reducing trend in the industry. So these are the positive signs when it comes to UPL. For Greenply Industries, the fall in stock was mainly because of the military coup that we had seen in Gabon, because the company has deployed nearly 20% of its capital in that region. But despite this, brokerages believe that this could be a transitionary thing, and recent meeting with the Investec analyst also suggests that the company has maintained their guidance. Hence, the bullish stance continues on Greenply. When it comes to GSPL, it is because of transmission volume recovery and high gas demand in the country. And when it comes to BPCL, it is the cheap valuation. Analysts believe that the impact on marketing margin could be transitionary and stable refining and volume trends when it comes to BPCL, and hence analysts continue to remain bullish as well as on BPCL also.
All right, thank you so much for that, Soumeet, for outlining all the stocks that could likely have some more steam left, given the fact the markets have scaled to new highs. We've seen a lot of these broader markets counters also see a sharpish rally. But what's the outlook? And let's ask that to our experts. Today we have Kunal Bothra, who's joining us on the show along with Mr. A.K Prabhakar. Very good morning to you, Kunal, as well as Mr. Prabhakar. Thank you so much for joining us on ET now. And Kunal, very interesting, right? We've been waiting for that 20,000. The 20,000 is hit. We've conquered that historic feat when it comes to Nifty. Broader markets, what a rally. And today they're taking a breather, likely so, given the fact that they've seen a sharp rally. But, Kunal, Soumeet just now outlined a very interesting data on the fact that which are these large cap or some of the noted stocks that could likely see further upside of approximately 20%. Have you come across any of these counters on the charts? Also, where do you see the markets are headed from here on? What sort of technical levels are you watching out for resistance and support when it comes to Nifty Bank?
Very good morning, Cheryl. A lot of points to discuss, but I'll keep it restricted towards three important criteria. One, whether the markets or whether the index is overbought or whether there is an exuberance in the index. I don't believe so. I believe that we've just gone through a breakout of a strong psychological mark. So it's bound to be that the market gets into a bit of an aberration before it steadies the ship and then moves into a very gradual manner on the upside. So I'm extremely bullish on the index. I would believe that such kind of volatility should be taken as an advantage for a trader to buy. Whether there is exuberance in sectors, I don't believe that there is exuberance in all of the sectors. Yes, there are a few pockets where the sectors have gone to a bit of a frothy uptrend. So you might see some bit of correction time-wise, price-wise happening into there. Coming to the large cap points which you've mentioned, I strongly believe that there are a slew of large cap names which are looking very attractive from current levels. I think the likes of HDFC Bank, specifically at current levels, ICICI Bank, which is looking phenomenal on the charts at current levels of 975, 980 odd, looks very attractive. Tata Motors is something which looks attractive even from current levels. Maruti has given a recent breakout about the 10,000 odd mark, so that also looks fairly attractive. And from the other names, I think ITC could be one of the stocks which could probably come back towards that 490, 500. So a slew of large cap names which have been underperformers in the previous leg, they could make a strong comeback this time around.
Okay, so the large cap names that are on Kunal's radar, he just highlighted. Thank you so much for that. But Mr. Prabhakar, coming to you, what's your take on the rally that we have witnessed in the broader market space? And also at this point in time, any pocket that still looks interesting to you and any pocket that you wish to highlight could be frothy at this point in time, and any recommendations as well?
No, Nifty, crossing 20,000. About 23 months back, we were 18,600. So if you take, 23 months, even 10% rally is not there in Nifty. And I will, whatever data which I track, it says, just 10 stock has 75% weightage in Nifty. So now we are talking about only 10 stock which is made, this 20,000 possible, not overall market. Private banks have not participated. FMCG has not participated. Chemicals or pharma has not participated. Life insurance has not participated. So it is very limited to PSU defense stock, PSU railway stock, anything related to defense and railways have done the magic. That is the euphoria which has been going on. So now investors should focus on value wealth creation rather than getting euphoric at this point of time. Maybe there are stocks which are highly overvalued. You need to avoid that. But there are stocks which are still attractive at current point of time. In PSU pack, if you want, Ircon is there, NMDC is there, GAIL is there, NTPC is there. Even in defense, BEL is still looking attractive. In private segment, I think a lot of stocks are still very attractive. Bharat Forge, Rolex Ring, UTI AMC, HDFC AMC, Tata Power, Clean Science, SRF. Now, in hospitals, you have Narayana Hrudalaya, KIMS, now SBI cards. No, there are few private life insurance, now which are private life insurance, which are still attractive. So they are attractive for 3 to 5 years. Then we need to look at those sectors. I think pharma and specialty chemical, they offer a lot of comfort, mainly in specialty chemical. I think China plus one will slowly play out. So if you are looking at 3 to 5 years, nothing to worry. But yes, the euphoria in few mid caps and small cap, it is mind-boggling. So I think today the declines are more than the advance. If it continues for 4-5 days, then I think the correction would set in. But that is okay. But for a long-term investor, I think this is the best opportunity to get in.
So basically, Kunal and Mr. Prabhakar, both of you all concur with the fact that abhi to party just shuru hui hai when it comes to the market rally.
Yes, very much.
Mr. Prabhakar is giving. Yes, Mr. Prabhakar.
No, I think we are just starting. I don't think we are at the end game. We have just started. I think long way to go for a big bull market.
Right, consensus view coming from both of our experts. The party has just begun when it comes to the market rally. A lot of headroom still left. But yes, we may see these bouts of sort of a correction creep in, but nothing to be perturbed about. But on that note, we slip into a break on this edition of Buy Now Sell